Uh, you would think, but
All right.
all right.
So we've got AT&T, Global Dynamics, Coke, ADP,
Colgate.
Colgate, Dow, DuPont, and
Oh,
it
that's an REIT. So I figured
is.
if there is anybody watching, this is us trying to figure out what we're going to buy for month 14. The biggest problem that we have right now is that the market sucks.
And we're looming on disaster here with the debt ceiling and all sorts of other things.
It's kind of like watching a fat person try to eat that one little muffin there. They know they're not supposed to, but they're going to, and you don't want them to, but they're just waiting, and they can't quite bring themselves to doing it. And I feel like I'm that guy right now, just trying to figure out what to buy because we have a problem. It's a pretty big problem. The debt ceiling's a big problem. REITs out there are a big problem. I went through and looked at, like, Brian knows this. I mean, how many homes did I go through? Like 30?
Yeah, a lot.
And we covered this when we attempted to do our last live stream, and it didn't go well. But we covered this where, in order for somebody to buy a $400,000 house, they have to make way past the average income. Like you had to have, in Michigan, anyways, the average household income is about $63,000 for household, not individual owners household. And if you bought a like entry level homestay or 300,000, if you bought a mid home, you're somewhere between $400,000 to $500,000 for that house. If you bought a $400,000 house, your mortgage is almost $3,500. So you can't. Most people can't afford it. So we looked at REITs because we want to buy them over and over and over again and try to figure out, well, maybe in LA, nope, maybe MPW, nope, maybe IEP, oh my goodness, they've got bond problems. Maybe, and we looked at like 6 or 7 of them in our last live stream that the audio sucked, but none of them looked good except for this one. And even then, I still feel like the timing is wrong. Like I feel like we'd still be jumping the gun on this, but
I think there's still time for the REITs and real estate in general to go down.
well, it's going to happen probably not as fast as we'd like. I mean, if you look at
Right.
the probate and all the government offices that talk about when the adjustable rate mortgages and all the tax filings come due, we have a problem with all these loans. Like I think it was 68% of and you don't have to quote me on this, but it was over 60% of the commercial real estate loans that are out there are adjustable rates. And when COVID happened and all those rates were super low, everybody refinanced. All the commercial businesses, they all refinanced. Uh,
Here's COVID right here.
yeah. Like, so
Phew.
you went from 5%, 6%, all the way down to like 2.5%, 3% on these loans. Well,
Yeah,
business,
I'm at 2.25.
that's crazy. I mean, that's really good. So if that's what they did in 2020 and they're on a 3-year cycle, that all comes due according to government offices, even in Michigan here where we do our work, this fall and this winter. And when you look at what happened with the Great Recession, um, the negative earnings per share, like trailing earnings were negative. I think it was like six times earnings back then. And then today, if you look at commercial real estate, it's higher than that. But residential real estate is only like negative 2.7. So residential is the anomaly here. Residential doesn't make any sense to me because if it costs $400,000 for a house, the average income of a household needs 30% of those earnings to be able to pay for that $400,000 house. And your mortgage is over $3,000 by the time you include taxes and insurance. um, we've got a problem. I mean, they can't really afford it unless both people are working and they're making that amount of money. So something's got to give, and it hasn't given yet. And it's confounding to me because as I'm looking through all these homes, we know somebody who just bought a $300,000 house, and it's like an entry level. It's kind of like living in California. It's San Francisco. You spend $1 million and you get a garage.
Yeah. Well,
That's
the problem is that interest rates are keep going up, and we're not convinced that the Fed isn't going to raise it another quarter, even though they said it's a wait and see opportunity. But I think both of us think they're going to do it at least one more time this year. So the house prices are still high because inventory is low because people have those low interest rates and they don't want to get rid of their house. I'm not gonna sell my house even though I could sell it, twice what I paid for it. Where am I gonna go? And if I get something, I'm gonna pay more unless I could put a huge chunk of change down on it than what I pay here for a lesser house because I don't think I can get an equal quality house for what I sell for this.
That's
No, it makes sense.
that makes sense. And it's true under the premise that I was talking to a real estate agent this morning about the same thing. It's like, okay, so if and Graham Stephan actually came out with an article about this or a video about it a few weeks ago, and he wasn't wrong, and I validated it based on what the real estate agents were saying. Where if you had a house with a $5,000 mortgage and it was a 30-year payment on the mortgage, and it was $5,000 a month. Um, if you went to refinance that today, rates are anywhere between 7 and 8% by the time you get to the APR, and your mortgage that's $5,000 is now like almost $8,000 for the same exact house. So
Right.
that's a lot.
I'm not willing to give that up unless there's some life changing event that happens.
And that's where most everybody else is at. They're like, well, if that's the case, I'm just not going to buy anything. So if you
So
look at
fast forward a couple months when this possible life changing events and a million people lose their jobs and unemployment goes up to 7-8% again. That's where the inventory is going to come from.
because it's just not there right now. He said there was just over 60 listings in the past few weeks at Greenridge. I've got a couple of guys I talked to. This guy works for Greenridge. And he said that of the 63 listings that came up brand new, of those, 96 of those listings and the current listings were purchased, and that's just in this area.
Yeah,
And
they go quick.
that just floored me. Like, so we know the rates are high. We know people aren't making this money, and they're buying something that they can't afford.
Right.
How does
And
that?
different areas are, will have different mileage. The West Michigan area that we live is a pretty decent area for, buying and selling homes right now. It's a little bit above the average.
I think Houston was talking about their market was dropping a little bit, and San Francisco finally showed that there's some cracks in the market. But
Yeah.
I mean, if you look at when they can't afford this house, they're buying this house. It's because there's nowhere else to go really. If you look at rent rates, another buddy of mine he was just here a few minutes ago, said that his daughter was looking for a house and they just bought one. Well, they did, but they were renting before, and it was a little 2 bedroom, 1 bathroom rental, and it was like almost $2,000 a month. So,
Right.
and the house that they bought was $300,000, and the $300,000 house had like almost a $3,000 a month mortgage. Well, they've got relatively good jobs. They just got out of college and everything, and they're trying to pay for these things. But if I'm them, either one of them loses their job or something happens, they're underwater immediately.
Right.
So how does and I know the Fed is in the debt ceiling argument with all that as a part to play in this, but to me that's like a different argument. It's a whole different discussion because if that happens, all stocks are down, not just real estate trusts. But are the
Right. Yeah. And then countries go under that are using our dollar as their current exchange because their currency is trash. There's a whole global economy that's going to suffer because of that.
we'll get
And
to
depending how quickly we can get our debt situation under control is how bad that's going to be.
yeah, we'll get to that. I want to talk about that too because um, right now it's just for the real estate side of things.
Yeah. So debt ceiling aside, let's just assume that at the 11th hour, Republicans and Democrats throw that one proposal that they've been saving that compromises things so that we don't default and we can just continue on our merry way.
It's kind of
When
watching it with
when is realty going to be a good buy?
yeah, it's so we've got these as far as real estate goes. We talked about the rates, talked about homes aren't affordable, talked about the negative earnings per share on the commercial real estate looks awful. 80% occupancy rates in commercial real estate. So those are looking terrible. If you have stock in
Right.
AEW or something else like that, you better pay attention to their finances real close. So how does that affect these things? A lot of real estate investment trusts have financial backing in rentals and commercial, depends on which one it is, residential real estate, commercial real estate. And if people stop being able to pay for or afford uh, their mortgages or whatever else, or they stop paying these real estate investment trusts, then that affects the value of the real estate investment trust being able to actually pay its bills. So, um, I don't know. Are you doing an audio check on us, Brian?
Yeah.
How do we sound?
Sound good. You didn't have to stop.
We did something right. So, the point here is just like if people stop paying their bills or there becomes some delinquencies behind that, we saw that the federal offices just said on their report last month that 21% appear to be over leveraged at this point, so they're behind on their payments. We talked about that I think in 2 videos ago. So that's all starting to come to a head. The problem that we have when we're buying a real estate stock is when it's never ceased to amaze me how long this stuff happens. Like back in 2007, I was like, okay, it's going to crash, it's going to crash, it's going to crash, and then it just kept going. It wasn't until like 2008 until things actually started to dip, and here we are now again. I'm like, okay, this doesn't look right. It's not as bad as then, but it doesn't look right. So when is it going to crash? And it's what do we say? Maybe this spring, and now we're thinking maybe this fall, and who knows? Maybe it won't do it at all. But the
Right.
the numbers aren't showing a healthy environment. So if I'm going to buy this stock, I'm going to buy anything in REITs, I need to see some healthy numbers, and they're just not there. I mean, as far as I can tell. So if we're going to look at O's position, there's quite a few other ones out here, but that's some backstory behind what's going on in real estate. So we're not, if you look at the finances today, none of the finances today show this stuff, at least not yet, because all those adjustable rate loans that people and mostly businesses have aren't up for renewal yet. Those come up for renewal this fall and this Christmas. So if you buy something now, you better pay attention to what's happening in 6 months. So here we are, stock symbol O. I see you going through the numbers.
Yeah. Just looking at some things.
Their PE ratio is they're pretty high comparatively. Well, let's put this on the spreadsheet. Let's just look at their regular assets, their cash flow statements, and income statements, so we can get into what we think the market's going to do later. I'm not entirely convinced that it's a bad time to buy it, but I'm also not convinced that it's a good time because I still feel like anything we do, even if we said, "Hey, let's just add to AT&T or let's triple down on 3M," for no other reason, just to confuse people. But if anything we buy without the Fed having problems with the debt ceiling limit is still going to be in a negative pressure environment.
Right. More than likely, it's still going to go down.
Right. And I hate buying stocks like that. I mean, I'm sitting on $20,000 of dividends from my personal portfolio that I haven't invested. Now, of the 30,000 that I've gotten between then and now, I have invested like 1,000, 1,500 here and there, and I've done a little bit, but I don't know what to buy because, like, okay, well, I could buy a bond, but if the Fed does default on their debt, well, that's a problem
Right.
because that affects.
That's what the banks are having troubles with, or like Treasury and stuff like that.
Yeah, so if I do that, then that could be a problem, at least until we know the answer to that. But if I buy a stock with a premise that maybe it might go down 20%, um, then I lose there. But if I just sit on the money and inflation stays high, well, I lose the money, get gobbled up just because of inflation's high.
Right.
So I hate being in this spot. Like I hate not knowing where a good play is. Like 2019, 2018, I thought, well, the market's a little bit overpriced. Things are a little bit too high from where their earnings are, but I still found some companies that their balance sheets look really good. And I was okay. None of them were crypto.
Mhm.
None of it was crypto. But right now, you were going into a season where we know the earnings are going to go down. We know that the income statements aren't what they should be in terms of like profitability. And the market's trying to anticipate this. So all the market's dropping like a rock or profit taking, whatever people are doing in a panic, which I think is ridiculous. And you have to somehow bridge the gap between their Q1 earnings in 2023 to what's going to be happening in the next 6 months and try to anticipate like what might not get hit the most, because the moment they come out with a positive earnings statements, people are going to think, or even 2 quarters of that, you do maybe Q3 Q4 this year and all of a sudden this company looks really good. Then people are thinking, oh, well, then I'll just buy this company. But
Yeah. The problem we have is, like we said before, is we said that we are going to buy one a month, no matter what, good or bad. And this is kind of just a bad month to do it.
time for you to eat your words, Tom.
Yeah.
But
So this is where we make the statement: is do as we say and don't do as we do.
I think I would do as we do. I mean, that's
Yeah.
the whole point of this is for the beginning investor to learn how to do this over time. And if you're going to dollar cost average things, you better dollar cost average things that you know people have to have. I know a guy who's all about that gold and silver and get into like fixed assets. Okay, if you think the stock market's going to zero, because that's what he thinks. He's actually thinking it's going to zero. It says, let's think about what that would mean if that actually went to zero. If the stock market goes to zero, that means the government doesn't exist. These companies stop existing, and you can't go to the store and buy a gallon of milk. What kind of environment would that be? It'd be like all the Netflix and all these crazy apocalyptic shows would be true. It would be
Yeah.
that's not a
What are
world.
you going to do with your gold?
So yeah, if you need a milk or a loaf of bread, what are you gonna do? Slice off a piece of silver and be like, "Hey, I'll trade you this useless piece of silver for your bread"? No, they're gonna you're not gonna want that stuff. So I don't think that's gonna happen. I think it'd be a lot more leveraged if you said, "Hey, I've got some shares of Colgate," and you said, "I've got legal ownership," assuming that you had some sort of ability to showcase that hey, I've got shares in this company. So hey, instead of a dividend or whatever, either a can I come work for you, or can you pay me a dividend in the form of toothpaste? So at least you got toothpaste. You might not
There
have
you
food or water, but your teeth are sure going to look good.
go.
I mean, it's crazy what people would think will happen. I mean, because if in order for that to go to zero again, everything's gone. Like the whole global financial system's completely kaput. So
Right.
that's just ridiculous to me.
And if the global financial systems can put, so does our society level of, you know, being neighborly kind of goes to zero too. That's when all the gun owners say, "See, told you, should buy
That's when all the people know who the
your
president
guns."
is. Oh, he's got food. Let's go to him.
Yeah,
So I don't think it's going to get that bad. I think that's a bit much. Hey, are
I
you
don't think so either. I still think that they're going to come to a consensus in the 11th hour, and they'll make some concessions just so they don't default.
right? The other thing too, for people to understand what that does, like the debt ceiling raising that does, is right now the United States dollar for the global currency as a trade currency is the major player. They're it. So if you are a different country and you want to have security in your finances, you use the dollar to conduct your trade or buy treasury yields or bonds. You buy bonds with that stuff. So if we lose the ability to become the world's reserve currency, we lose the ability to print as much money because somebody has to buy the money that we're printing. And if
Right,
you can't print that money, then the government just can't keep spending. So if you look at what happened in Venezuela and Greece and any of those countries that overshot themselves that way, that would be us if we default. And that's no bueno. That's not good. So
right. We could keep going because we pretty much have an unlimited borrowing capacity.
now there's got to be some responsibility for that, and that's why the Fed is raising rates to make sure that we still look attractive to buyers. Because if we don't, like China owns over 850, some like $880 billion of our debt. if we start printing more money and they want to put that money somewhere, I mean, do you really think if we default on their debt, they're going to be like, hey, let's get some more of those dollars? Like, they're not going to want that.
Yeah.
So the Fed's I wouldn't want to be them right now. They got a tough, crappy, horrible job where
Of
they have,
course, that won't be overnight though, because there isn't another currency that they could switch to. The euro is the closest, but
they're
they're
trying,
not in a position to take over right now.
they are trying, like
They're
the
trying, yeah, but
with Brazil
it's
and Russia
going to
now
be a couple years.
for the yuan.
Yeah. Oh, yuan.
I don't even know how to say that.
Yeah, I don't think China is going to take over anytime soon either, mainly because they don't let their currency be traded on global markets. So,
They got a population problem too. They
yeah.
figured that out. So when you look at these numbers, I saw you bounced off. Oh, you're looking at general dynamics now. Let's dig into general dynamics a little bit because this one you brought this up and I wasn't expecting it, so it's kind of interesting.
Well, this is why, because I was looking at stocks we own, and they recently got a $1 billion contract for the Virginia class subs, which is good. So they're gaining money because they've been losing money.
hmm
So they've been spending, but the rest doesn't look terrible. Oops, darn it. Go back.
Oh, you done it now.
Okay.
You were gonna be upset with you.
Hmm.
Total revenue.
Operating income's pretty.
You'd have to look
It
at it
went down.
here, but we've done that a few times with these guys already. So
Yeah.
anything we don't have their I-9s in front of us. So, and for
No.
anybody who actually is watching or tunes into this later, this is one step. Like we don't just do this. We look at a lot of things, and this is just us trying to figure out from a financial standpoint where these companies and these guys look good and where they don't. Uh,
Yeah. And we do this to determine whether we want to investigate further and deeper.
yep.
If it doesn't look good here, it's not going to look good deeper. But if it looks good here, then it's like, yeah, let's see why they look good, and maybe they're a great buy.
What happened with their liabilities? Because I said they were awarded a contract last year and they
They're
had
pretty flat.
to spin it up. So are they really done with that? That's interesting.
Yeah. So assets went up just a little bit,
Okay. They had to issue shares or something to pay for it.
and then yeah, liabilities stayed pretty flat.
What about their outstanding shares, total liabilities and shareholder equity? Okay, so they did. Okay, they did issue some stock. Okay. What about their cash flow?
Cash flow has been going down.
It's kind of like when I thought, hey, I'll buy ADP. They'll do good with the recession because they charge microtransaction fees when anything changes on a payroll basis. But then you look at their cash flow, it's like, what the heck?
They
What
have cash.
total cash from operations? So they have it. What is the beginning and ending balance? They might be, yeah. So they're only reported annually, but so they went down 400 million,
Yeah.
and then it looks like they started at, oh, they gained it first quarter. I'll have to keep seeing what they end up doing the next few quarters. So they look okay. What about their operating revenue? These guys build tanks.
And submarines, evidently. Revenue. So total revenue has actually gone up. It went up and then went down a little,
It's
but
amazing
it's up from.
people expend ammunition in Ukraine. Not that that's a good thing.
And expenses followed. Total operating income went up and then dropped a little.
Hmm. All right, well, we'll put these on our sheet. These guys don't look terrible, though.
Well, the reason I started it is I saw that, but I also saw that they're trading at their 52-week low.
What is their trailing PE?
Where is it on here? Is it here?
I think the quick statements aren't going to show you that. You're going to have to go into the summary.
This is TD Ameritrade. I always forget where everything is.
Trade account.
No.
No, go to summary. It'll be, you found it before I did. 16 times earnings or 17 times earnings. Oh, okay.
Price to book is almost 3.
Yeah, put that in the spreadsheet before
It is.
the next one. Oh, you have it?
Yeah.
You mean
I already
you're
put it in there.
doing stuff when how come I don't see it?
Right here.
No. The PE ratio, put that in there.
Oh, yeah, let me put that in there.
I do.
This is going to take forever.
Imagine that. Investing is actual work.
16.9.
You mean I can't just like click record and the money just comes in? Sorry, Brian.
Well, I know. I've done this before. It takes a long time.
I'm older than you, young man. Earnings per share. We can look at those too. I hate looking at EPS right on the cusp of a recession, even if it's a mild one.
Well, this is the trailing 12.2, if this is right.
That's way better than it was when we bought them the first time. We'll keep it at those two numbers for just this live stream for now. All right, let's. We don't have the real estate company in there. Let's throw those numbers in there because we looked at them last.
Yeah, I'm gonna do this. Let's move this closer. There. All right. So now we need to do. So EPS is 1.42.
So making stocks exciting. Maybe what we need to do is like treat it like wrestling or like power slap, where if the company doesn't look good, like we slap it and some guy that we can't afford from the non-existent monetization on the channel, like throws the thing off the screen and yeah, I'm going to stop now.
Maybe.
How do you make investing fun? Like, how do you make it exciting for people?
I don't know.
It's exciting to get the dividend checks. Like, I love getting them. But like, how do you say you're gonna like you give a guy $1,000? You say, okay, you're gonna give me $1,000, and we're gonna buy like Verizon or AT&T or Johnson Johnson or something stupid, some company. You buy Coca, and you get $1,000, and I'm gonna pay you $3 a month from that $1,000. The guy's looking at you like, what is wrong with this person? But over time, next year maybe $3 is $3.30, and the year after that it's $3.70, and the year after that it's like $4. I mean, it pays you back, and you still have your $1,000 most of the time, and it starts paying you really well. So, wow, the earnings per share that requires investigation because I don't think it's going to be pretty good this winter. So
Yeah,
it's a boring way of investing. I mean, you've got I mean, for goodness sakes, you take a long time to make a little bit of money. It's just like what Warren Buffett said: you get rich quick, slowly. It's not like all these people who bought crypto in 2016, and then their $10,000 was worth like $1 million in 2020, and then it's worth like $20,000 now. So that still took like 8 years to happen, but or 7 years to happen, but that's a really big yield. That's like Zim.
it always does that when you change it. There we go. When you already have a number in there and you change it to percentage, it adds 2 more decimals and then moves a decimal over, so it makes it a lot.
I mean, earlier on in the stream, I told people about what dividends that I hadn't spent yet this year, and you look at General Dynamics, 2.56%, and you think, well, God, I'm only going to get $2 a month for that $1,000 that I gave you, and yeah, but next year that's probably going to be somewhere around $2.20, maybe unless there's world peace, which that would be cool, but it's probably not going to happen. And then maybe next year's $2.40 or whatever, but it's not showing them that, which is why we have this whole portfolio to begin with, is a whole lot different than just telling them that that's what happens. Like instead of like the easiest way I would describe this to somebody is you become the credit card company or the bank instead of the person giving like taking the loan. Let's say you get a car loan and you got to make payments on that car. You're the person giving the money, giving the person the loan so that they pay you. That's what
Right.
you're doing. So you can't just buy any of these companies. Like none of the companies on, even not even on this list, you can't buy them with the premise that you should pay me back in 6 months. Cause like you can't do that. Banks have 15 and 30-year mortgages that people have to pay, but that's a mortgage. A car loan is what, like, I saw somewhere that the average car payment was $800 a month. Like,
Yeah, something like 800.
what the heck? That's a lot.
That used to be a house payment not too long ago.
Was my first house. When we bought our first house, that was my house payment, including taxes and mortgage and everything. It's like, geez. And that was a 15-year house payment. So,
$700.
yeah, I mean, that's exactly what these companies and the banks are doing when you get a loan from them. They're getting dividend checks from you. So I know 2% isn't the same thing as like whatever, like, hey, I gambled on Zim or something and watched my stock price go from $90 a share maybe down to what is it now, 15, 14, something crazy. But like I know it's not the same thing, but when you look at your mortgages 2 years ago, that's exactly what it was. You had a mortgage for 3%, and that was the bank's dividend. That's how they paid for their operations. I know there's fees and stuff in there too, and they got to pay for their staff, but that's
Right.
so you're doing the same thing. And anytime you walk into a large bank, do you ever have any question that they're making money? Until recently, but like, do you ever have any question that you go to Comerica or Chase Bank or Bank of America, like you walk in there and everything's modern and new, and they got a nice little grandfather clock in the corner. Like it works. It just takes time, and I get to get off my soapbox, but that's a really good PE ratio.
Well, if we trust it.
Before I keep on my soapbox, what do the finances look for these guys?
For AT&T.
Yeah, but to finish that other thought off, that's what this is. I mean, you're becoming the bank. It doesn't start out very big. I think I started out making 5.15 an hour, and I had like $100, and that was all I had. I had nothing else, and I just bits and pieces here and there. And the revenue went up,
Revenue went up, assets went down, liabilities went down as well, about the same amount.
same
Total
percent.
operating went up. Well, it went way down. Look at that. Dow. What happened in quarter four?
That's when they do their annualized statements, so that could be a tax move. Look
Hmm.
into that a little bit more. That's maybe that's why they when they released that report about a month ago. That's why the stock dropped so much. Just like boom, one day it's down.
Maybe.
We haven't owned it yet for a year. Actually, no, I stand corrected. We have owned this one for a year, so we could have sold it and broken even plus our dividends. But that doesn't. I'm not all about that. We have no reason to sell because we have to buy something else. That's the thing about
Right.
selling stock. Just like a house. If you sell a house, you have to live somewhere, so you got to buy something else. What are you going to buy?
So total net income went up a little bit.
Okay.
They had a pretty good quarter three.
If you go over year, take a look at their annualized report. Just switch that to annual. Let's go back to the operating income.
Yeah, where was that? There we go. Total.
Oh, that's
They
why.
only got 22.
Yep.
They don't have 23 in here yet.
That'll show up in a little bit. We could pull their I-9 to see it too. Gosh, you can tell they're buying. I know they're building some of this infrastructure out, all that new fiber they're putting down.
Right. They're trying to get out of the copper game.
Trying. I got my phones from them. It does okay. It's actually cheaper than Verizon was. So
I've had an AT&T for my cell phone for a long time because I had a iPhone and they were the de facto iPhone at the time. I just never changed.
let's go to quarterly and look at the balances there.
Quarterly?
Yep.
Quarterly cash flow or quarterly?
Quarterly cash flow. Are people really so fickle to drop it that much based on one quarter? I shouldn't answer that.
But look at it. 11 billion, 21 billion, 32 billion, 6 billion.
They're building, like I said, that network that they were talking about. Go down to the.
Yeah.
They acquired somebody too. I know they did that. That change in cash. That looks yummy. I think we could take AT&T off the short list. Just to just until we see some difference there. That's probably from the acquisition. Now, did they do it just out of cash flow? Because they didn't have enough cash flow to cover the acquisition. So look at how much stock they issued. Yeah. Okay. So they did quite a bit. Um, all right. So AT&T's we can just cross that off.
Okay.
We're doing fine. We only spent $85 billion that we didn't have. It's the American way, man. Buy stuff you can't afford. Pretend
That's not it.
don't you work at McDonald's? Why are you driving a Lamborghini?
I didn't always work at McDonald's.
50 years of payments. Got this Lamborghini. This bad boy is only $300 a month, and I can will that payment to my children.
I used to be the CEO of Signature Valley Bank,
It's like the
or
Jim.
Silicon Valley.
What was the name of that movie? Fun with Dick and Jane. Is that what that movie was?
I don't
They lose
know if I actually
their life.
saw that entire movie.
No, you got to see that. It was. There was a point in the movie where at the very end, like he's driving this used convertible, and the guy that got him into the first scam pulls up next to him, and he's like, "Yeah, you should come check out this new thing I'm doing." And he's like, "It's called Enron," and the guy's like, "Oh."
There we go. I finally found out how to strike through. All right. So GD, we got Coke. Let's do Coke.
Coca-Cola, they're next. Let's look at. They've been doing a lot globally lately, and they actually talked about some of their drops in their expected revenue on their most recent investor call. I was only in on part of it, so I didn't see the whole thing. But okay, I'll wait for you to get your numbers in there.
And that was EPS.
You know, and on the positive note too, um, our dividend checks are still coming in. I hate the thought. I'm going on a lot of soapboxes today, so sorry for.
You are.
But I hate the thought of telling people to invest in something that when we know the market's going to be going sideways or even down a lot if we default. Like we we bought a stock and then like 30% like the next day because we default.
Right.
But I mean that happened to Intel. Intel dropped what 20% after we bought it. Now it's fully recovered. Plus they're positive 5 now.
Right.
I'll have to show people that towards the end of the stream. Just as like all the stocks that were doing bad are now doing good, and all the ones that were doing good are now either flat or doing bad. But the market itself has dropped a lot in the past few weeks. Um, Normally that means it's a good buying opportunity. Okay, so their assets.
Went up.
Go
This is quarter over quarter. Liabilities also went up
okay, so that's about 3.5%.
by a little bit less than what assets, but
That's pretty close.
yeah,
Okay, let's look at their operating net revenue. Well, that doesn't look so bad.
operating income up, up,
Do they
down,
have
up.
their 22 number? Do we? They should have it by now. Go to the annual on this. The thing I hate about these trading platforms is they're not always current and they're not always consistent.
Yeah, it's not. Well, it's got 22, but
Yep, that's what we want. So on an annualized basis, they look okay. Let's
yeah,
go to the ticker symbol and let's see where they're at in terms of trailing, like where they're a 52-week high, 52-week low. And I don't care about Bollinger Bands or the RSI either. I know people like the smart moving average. I know they like watching those things, but quite frankly, if you're investing for the long term, they mean not quite, but almost nothing.
if you're day trading, they mean something.
Yeah, but we talked about that when in one of my nerd rants. Like, what is it, 1% of like 1% actually make anything? Day trading.
Let's
That
draw
doesn't look
trend
too good.
lines.
Go to 3 months for me.
Now I'm drawing trend lines.
Dang it.
There,
I hate trend lines.
3 months.
Yeah. Hmm. Your internet swift like tree.
It is. It's 600 meg, man.
It took it like 5 seconds to load it. I
I
should say.
blame Ameritrade.
Um. Mhm.
Coke.
Okay. Let's go back to fundamentals and back to the quarterly income statement. We were on annual, so I have to change it. And can you check the feed, make sure I'm like we still sound good?
Well, see, that's why we have a production guy. No, I guess not.
Sponsored by nobody. Even if it was, I probably still wouldn't care.
Yeah, it all sounds fine.
Hey, all right, it's still good. Um, okay, let's go to their operating expenses. What happened there?
It went down.
Yeah, why?
Well, that's
Restructuring. Translation: layoffs. We saved $1 million. How'd you do that? I killed them all.
and then we burned the building down for insurance.
Like Office Space.
Mm.
Okay. I did hear about Coca-Cola laying people off. I did read that. Net income, yeah, of course. It's amazing what happens. You fire the people that have been dedicated to your company for 25 years, give you their life blood, and then you hire some college student who doesn't know any better for like 1/3 the salary. You can hire three of them, and then hey, you can look at it great to the investors because the investors see that your net profit went up.
Well,
Um,
yeah,
I don't think that's
short
entirely
term.
the story here, but cash from operations, ooh, okay,
Hmm.
that requires investigation. Let's go down to
Well, that's interesting too. They're doing something this year.
it's a problem when you only look at a company every few months or every year that you see you have to get updated pretty quick before you buy them again. So beginning balance, ending balance, they report that annually again for accounting basis. So when you see when people are looking at Q2 2022 and they see the 10,025 and it goes all the way to Q4, that's just because that's the beginning balance for their fiscal year at beginning. And then they change it when they start a new fiscal year. So it's
Yeah.
going to
So if
show
we go to annual, it'll
Yeah,
show
go
you.
ahead. Yep. There you go.
There's a 1025. But it doesn't have 23 because they've only one quarter in.
They're sitting on $10 billion.
$10 billion.
That's like Apple sitting on, what was it? It was Apple, right? Like a
Well,
trillion.
their ending balance is 12 billion. So yeah, Apple was sitting on God, what, 500 billion at one point.
The point when they were doing that, inflation was really low, so it wasn't necessarily bad. But can you imagine having that kind of cash flow and not knowing what to do with it? Buy a
Yeah,
yacht? Well, we did. Hire a bunch of people? Well, we did. Buy a big circle building? We did that too. Go to
let's
space?
buy a bunch of companies and see what we can do with them.
That's there is. I guess that's a really good showcase for there is an actual cap to the market. Like there is a customer cap. Like they can only go so far.
But now they're like a $3 trillion company. So
And somehow people think Tesla is worth more than them. Okay, but not more than all the other automotive companies combined. Go to the balance sheet again, real quick.
balance sheet. Why am I doing this?
Because that's the only way our streaming software allows us to see both you and me on camera.
You could do it and share it.
Yeah, but then you'd have to stream.
No, you could stream it and do it.
No, because my camera can't work in Teams. We need an actual setup.
Yeah. All right.
All right,
Or
so
not use Teams. All right.
I'm not like super positive about Coca-Cola. At least not yet. We have stock in them. I think some of this requires more investigation between them and General Dynamics. Based on what I know, I think we should still look a little bit deeper. But I'm more about the General Dynamics right now. Let's look at ADP. That's the one I want to buy. But just like real estate, I can't bring myself to doing it.
We could buy 2 shares.
Got to start somewhere.
So 7.83 EPS. If it'll highlight EPS. Why'd it go down there? Don't go down there.
So when companies like Axios and ADP reduce their payroll numbers, like their customer basis payroll numbers, the cost to them goes down. So if my company had less employees, my cost with my provider would go down. So in this case, if it was ADP, it's not ADP, but if it was, the cost of my company would go down, but so would their revenue. Their revenue would drop too. So that's why I'm conflicted about this one. And even if the commercial sector's not as bad as it was during the Great Recession, even any kind of contraction will affect their revenues. So they're trading relatively high compared to what they were before, aren't they? Let's look at some of their earnings. So go to the yeah.
Fundamentals.
They're still trading. They're not back down to where they were, but they're still pretty high.
Assets going down. Liabilities also going down.
Go to long-term debt. Oops, that's under balance sheet.
It messed me up. Long-term debt. Long-term investments. Long-term debt. Same.
They got to tick it up by that little tiny bit. Okay, so their total debt went up. Look at those unrealized losses.
Every single quarter.
Yeah, they said that.
Treasury stock. Look at that.
They almost look more like a bank than they do a payroll provider, don't they?
Yeah.
'Cause that's what all the banks looked like a few months ago.
I wonder if they're
All
gonna
right,
sell all that.
let's go to the income statement. That doesn't make me feel warm and fuzzy, but
Operating income's going up, quarter. Expenses also going up. Net income going up, quarter or over quarter.
that's not bad.
Let's see here. Total special items went down. Gotta love special items.
It's like the unusual items that they report.
Yeah.
Instead of
Why
unusual,
is it
it
so
says
unusual?
when their accountants don't have it together.
We don't know what to put this under.
It's like government general funds. That's a big bucket. I just pull from the big bucket.
Cash for operations. How do they got Q3 2023 in here?
That is a really good question. I think their fiscal year must end at a different.
Yeah.
Yeah, their fiscal year ends mid-year. That
Yeah.
makes sense though because of tax time.
That does.
I didn't. I've had AVP stock for 15 years, and I didn't even know that. You're the first guy that pointed that out.
There we go.
I never noticed that after all that time.
I could be observant sometimes.
I'm not always observant, but when I am,
They have cash. They have 18 billion.
look at the net change in cash though. But they're reporting it on a the fiscal year end is throwing me off. So I gotta look at it as of last
So this would
September.
be, yeah, this would be the last. And then this is the start of their, so September, yeah,
So they went from 13 to
to
18.
22. Yeah.
So let's do an annual look at that. Yep, 13. And their ending balance was 22. So they really didn't go from, well, they kind of did. I mean, it still shows 18. So they're, isn't that funny? 2022 September, they report a net change of $9.6 billion. But then when you look at the most recent quarter reports, it just shows these huge negative numbers. You'd have to pull up a 99 to see how they do their tax reports. Go back to quarterly for me. I want to see where that cash came from, or the draw on it came from. They paid 1.386 billion in dividends in March 31st. Good lord. I remember when that number was half of that. All right, so let's go up. I'm looking for something I'm not quite sure. Accounts receivable, that's one of them. We're not going to see their good quarter until next quarter. So Q4, that's why they do Q4 the way they do it in June, because tax season comes up and then they can report a really good year end. That's clever.
Hmm.
I'm not sure that's ethical, but that's clever. um, go back to that ticker chart for me. And after let's look at cash flow next. Do 6 months. That's actually not a bad thing. Do 1 year. flat. Flat out flat. But that is low. 52-week moving average. That's pretty low.
Close.
Yeah, do 3 year. I know that COVID's going to screw that up, but it's like 3M or even Fastenal. Fastenal stock. Market's crashing. The world's on fire. World War III happened. We're all going to die. It just keeps going up. Doesn't matter.
Buy
Guy jumped
more.
off a building. He's dead. The CEO's gone. The board's gone. Stock keeps going.
Company will keep going on.
Let's do a 20-year symbol so people can see, because I've had the stock forever, so they can see
A
what
20
happens.
year?
Yeah, go back to the summary.
I don't think it'll show it. Oh, it did.
2007 was when we bought it. It was October? I don't remember.
34.
It was high for the year.
So 39-ish, 40.
Yeah, it was like 40 something. I think it was $41 or whatever. And they paid dividends the whole time from
And
then.
now it's 219.
Sonny, back in my day, I got 1 penny on a dollar. That does speak better because when I last looked at ADP, they did not have this report, so I couldn't see any of these numbers. I think the numbers look okay. So this we're gonna dig deeper on this one. What else we got on our list? We got. I think they look better than Coca-Cola does right now, so we can scratch Coke from that list.
Oops.
Not General Dynamics though. What stock did you buy? The green one.
CL.
Colgate.
Colgate.
They make toothpaste. Let's look at this one really briefly. Start with the ticker symbol because they've gone up a lot. Maybe not in the past few days, but oops.
Oh,
We're good. If there is anybody watching, then that was exciting. All right, let's go back to Colgate if we can.
okay.
There's only two more, right? Colgate,
I think
DuPont, and Dow, right?
Colgate, Dow, DuPont. Yeah.
We have a lot of chemical companies. I'll look at them briefly, anyways. So, for anybody who is watching or does watch in the future, we're probably not going to dig into the next three very much. So, what we're doing with this stuff is we are attempting to figure out which of the shortlist stocks that we're going to buy. We actually did quite a bit of analysis. There's like 4 months or 4 weeks rather in a month that we've been chasing this for the past month. These are the ones that hit our shortlist. And for the real estate stocks, we're just going to wait again.
All right. So ADP.
Yeah,
Now that I am on Do Not Disturb, they're 191 and 40 PE.
their PE has always been high, though.
Yeah.
Oh,
40.08.
and that's
Might
their
as well be.
that's their gap GE earnings per share.
Yeah. I know.
Is it gap or gape?
I always said Gap.
You're going to offend the clothing retailer.
I don't know. Generally accepted accounting principles. Gap.
2.51% dividend yield.
Might as well put it on the board.
Oh, wait, you're on Colgate. I thought you
Yeah.
were doing ADP. Good grief.
Colgate Palmolive. So that's really what we're looking at. 3 years. Look at them go up.
Yeah, buddy, 30%. Go to the long term chart on those guys. Had these guys since about 2011 ish, sometime middle of 2011.
That's solid.
Yep.
Everybody needs toothpaste, and nobody likes Aquafresh.
I mean, this is nothing like Zim, PBR, SCHD, IEP, MPW, any of them. It's nothing like it. But you can't argue with the returns.
Right.
Assets up, liabilities, they're up too.
Also,
Let's look at cash flow and we can call it good on these guys. I'll have to dig more. I'll dig into it a little bit more before we do our actual purchase video.
up, down.
That's pretty normal for a fiscal year end. Hey, look, they report fiscal year end at the end of December like a normal company does. Shouldn't say that. There's a lot of companies that do it off kilter.
A lot of schools do. Administrative. Because of the school year.
Right.
Universities. Total cash from financing.
They did lose funding. I thought they might report down. All right, I'm going to investigate their cash flow further. In the interest of time, because we're almost hitting 6 o'clock. Let's quickly look at DuPont and Dow.
DuPont and Dow.
Between the companies we looked at, the ones that are interesting to me are Colgate, ADP the most right now because of what I see happening this fall. And
we don't already own them.
Yeah, that's another. It's a sector we don't actually have, so we're diversified. And if anybody's watching and they check what our portfolio has done, is the market flips just like we said. Stock purchase month 5. I think we bought RIO that month. All the ones that were doing good are doing bad. All the ones that are doing bad are doing good. It flips like that. So DuPont, I want you to see the ticker symbol on these guys past 5 years. They really shrank. DuPont's a really good one, though, if you want to get a feel for what the actual market's really doing. They're a pretty good gauge of the economy. Is that DD?
Yeah, this is DuPont.
You can't see it because of the...
It's only been around since 2017.
No, they haven't. They've been around longer than that.
Not according to this.
Yeah, that's wrong. DuPont's been around a long time. TD Ameritrade, got to get your stuff together.
It's like maybe Charles Schwab. That's coming up. Charles Schwab.
It's like November. GM stock when they went and redid their ticker symbol too. Yeah, we should probably do a video on this one, just to explain to people what the heck happened. Because I have DuPont and I've had DuPont since like 2007, but don't have a lot of DuPont anymore. But back when I first got them, they went up a lot. We actually used the proceeds that we had on that for our down payment on our house. And then we did it again for the house that we're in now, some of the sale for that. But it was actually a really good time because that was in 2019 and they were actually pretty high up back then. And then right after that, the next 4 years, they went way down. And then you saw this. So like, it's not, there's a story there and I'm not sure. We don't have time to cover it now, but maybe we should at some point.
Yeah. Net income. What happened to 2023 here?
I'm gonna say I'm not real interested. I don't know how you feel, but
yeah, probably not at the moment.
Gotta love corporate restructuring. I still have a few shares in them. I think it's only like 10,000 or something, but so not a lot, but
the revenue's still up there.
Not compared to what they used to be.
No.
DuPont used to be a lot bigger than they are now.
Yeah.
A lot bigger. All right, we can cross this one off. We'll look. We'll come back. Probably look at these guys this summer. I think they deserve a whole separate conversation about what happened to that. Maybe we'll pull up a different. Like if you go to Yahoo Finance or money.msn.com, does it show DuPont's historical price? Just so if anybody does see this, they can see what I'm talking about. It's just money.msn.com. And then just search for, you got to click on the money thing at the bottom or in the little,
Yeah.
yep. And then, yep, DD. I get, I'm entertained by the daily fluctuations. All right. So go to the max on the chart there in the top left. Yep. Oh, they don't even report it there either.
Ha.
Uh, I think new investors might want to know what's going on with that. All right, let's look at Dow. We don't have any time left, so
Hey,
same thing.
same thing.
Yeah, they split off. There's a bunch of sales and acquisitions and restructuring and everything that took place with Dow, DuPont. There was two others that did it, and I can't think of their name now. But they everything was all up in the winds. It wasn't quite like the automotive industry going bankrupt. It wasn't like that, but it was. That's why you only see a stock symbol for a few years.
Ouch.
Hmm. Okay. Deferred taxes. Go look at that. Go back up to that.
Oh, look at that.
Uh huh. They're not done restructuring. So if they didn't defer their taxes, that number would be a lot worse. Okay. Cash flow. So they started with 3,033 or 3.3, just over 3 billion.
3 billion
They went to
to
3.
3.4.
Now they're at 3.4. So, like you said, real quick, let's look at operating revenue. It's on their income.
Total.
That doesn't speak well. Just the total revenue.
Well, look at total revenue 11.8 for my expense. Oh, this is expensive. Oh, look at that. 51.
These guys, Dow Chemical makes like spray foams and oil
But
mixtures.
yeah,
I mean, they make a lot of stuff. So,
there's a story here.
well, last time during the Great Recession, DuPont did the same thing. They got destroyed. I think they were trading at like $60 a share. That's why I wanted to show you that symbol. I think they went somewhere down around $26 a share. We bought them about that. Like that's this. Like I said, they were one of the companies that DuPont, not Dow, DuPont. But we ended up getting a down payment for our house because of how well they did. But we can't see that. So maybe we'll have to figure out how to show people that at some point. But they, as far as the guy that mentored me, the guy that was worth $1 bazillion and drove a beat up old car, didn't know how to use a computer. He said that they were able.
Warren Buffett.
I wish I'd love to talk to that guy just one on one for a while. I don't think there's not a lot of time left that he's got, so
Right.
if I'm ever going to get that chance. But and then they also say never meet your idols. I don't know if he's my idol, but I respect what he did. Um, Dow, yeah, the companies like that. He told me his name is Robert, but he told me that they were a good measuring stick, good yardstick for the economy, see how the economy was doing. And right now, if that's an indication of it, that's exactly the way DuPont looked before the 2008 recession hit. The way Dow Chemical looked now, they were just like right here. And then right after that, everything just went way down. So
Hmm.
that's the other reason why I'm kind of leery about Colgate, but I'm leery about all the stocks on this list. I don't like recommending to somebody knowing that there's a good chance, like if there's a better chance of it dropping with the way the economy is right now than there is of it going up. So should they buy
Right.
a bond? I mean, do we tell them to buy a bond? Do we? Because there's no dividends in that. We I mean, the whole point is if they haven't maxed out their 401k, they don't have a Roth, they're hopefully they have a financial advisor. Um, if they're not maxing those things out, they got to do that first. They have the HSA max that out, but then if they're done with that and they're actually buying stocks, what should you do? Should you buy a CD at a bank? I mean, they're at like 4 or 5% now. Warren Buffett did $13 billion of that. He took. It's not. Everyone's like, oh,
Yeah.
he sold all his stocks. He didn't. He didn't sell all of his stocks. He sold like 13 billion of them, and then he put them in there because he wanted to protect principal. We can't
Right.
do
A
that.
CD wouldn't be a bad idea. Just to cover, if you did a year CD and covered the time frame that we think it's just going to be down.
So we buy a stock that pays a dividend. It's looking like ADP, maybe General Dynamics. Um, and we just tell people that we did this, but you could also do this.
Right. We did this because we have to buy a stock. You don't have to buy a stock. You can put it into something else, like Zim. That's down to 14.12 now.
They're not done crashing. No one's not done yet.
Yep.
I uh, I don't know. That's the shipping industry cyclical, but they got a ways to go yet. And I don't know. Most people don't have resources to invest like that risky.
Right.
That's what scares me. Seeing people buying like all of these super ones. Like we talked about, what was it, Jeppy? We said Jeppy. They were leveraging against their competition, not necessarily their covered calls were for people buying to make them money. But what happens in a recession? Those covered calls don't look so good. So what did I say? Like down 20-30% in the next 6 months. They did exactly that. They went down 20
Right.
30%. So like SCHD and IEP and all the big ones like that. That's ADP is nothing like those companies. Neither is Fastenal, neither is 3M. But at the very least, why would you buy a company so you could lose that much principal? Oh, well, I'm going to hang on to it. Well, go ahead, hang on to it. But you're going to, I don't know. I mean, if it was my own kids or something, it's like, what if you need that money? What if you have a medical problem? What if you lose a job? What if you've got other
Right.
problems? I mean, sure. Well,
And that's the thing with a CD as well, is if you put a 6 month or a year CD, you got it in there for 6 months to a year.
and you're stuck.
Yeah, you're kind of stuck with it. Whereas a stock, you could still sell it. But we're looking at more recession. So you're looking at the energy, food, uh, defense industries to kind of get you through that period. And no matter what you buy right now, it's going to go down because we're not full into the bottom of a recession, I don't think.
No, and I'm getting antsy or greedy. Antsy, what is it? What am I?
You're getting antsy. You're not greedy yet.
How do you find the bottom? That's a hard thing to discuss. It's a hard
You
thing to
don't.
figure out.
So what you're supposed to do is, if you know that there's going to be a recession and there's indicators that within the next so many months, 6 months, whatever, I don't know, who can really predict it? It was supposed to be 18 months from
It
a
was
few months
last year,
ago.
wasn't it?
Yeah,
Last that we did it until they redefined what a recession was.
right. So then you just take your chunk of change and you start dollar cost averaging and buying during every month during that time, so that by the time you do hit the bottom, that you still have money left over to keep putting into it.
Pull up our portfolio real quick. So I think this is a good thing to show people in maybe a video short or something, just to like this last part of the video, I think has been pretty good. So if we look at our positions, wow, the market really went down quite a bit since we looked at it. Negative 1%. Oh,
We were up. That's still not terrible though.
Go to let's go to our it says so like if we stay here and we look at this, you think, oh well that's not that great. Right, but we get dividend checks. We're getting paid. Remember that $1,000 I said earlier on, and you pay them, you get like $3 or something a month, and you look at our income on this, we're still getting paid. Now watch, Devon's gonna show the wrong number. Like they
Yeah, this is more like 40.
40. No, it's more like 20.
No, it's more like 40 last time because this is wrong.
I did hear that Devon cut their dividend. We expected that though. Like we said that in that video. Like they're probably going to cut it a little bit.
It says 9%.
I don't think it's 9. I think it's like 6 now. But we'll have to see. So we're getting $20 a month. So on the first year of investments, you've got basically 5% of your total invest. If you were investing $400 a month, now you only really need to invest $380 a month after 1 year to get the same level of investment that you had last year. That's year one.
Right.
Year one. That's why I keep telling people this doesn't happen right away. This happens over time. So all these people buying PBR and the big companies that pay these ridiculous dividends like Devon, no offense to Devon, we have Devon too, but it doesn't work that way. It takes time. And that snowball, man, once that thing gets going, you start buying stuff. You have my problem. You start buying fancy things. And that's not a bad thing because you know the dividends are going to come next month. So make sure the companies you buy, for crying out loud, can afford DVN. Yeah, you got it. Can afford to keep paying that dividend. And if they can't, at least base your passive income on what you believe they can afford. Like what we say with RIO, they were 18% or something. We said, no, 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 they're like 10, and they finally went down to 10. But when is that reported? Their X date is the 14th.
Yeah, June 14th.
Okay. Well,
So it says 9.
yeah. So at the very least, we've got more than $20 a month coming in the dividend use portfolio. And so if that's coming in, everything we did the first year is still coming in for the second year. So
Right.
we should bring that up in the video. Anybody who's watching in our next video, we should say, look, instead of $400 a month, now we're investing $420 a month. Might seem strange to them, but we're getting paid for everything we did in the first year.
Exactly. Now
So
you can buy more and more and more, and especially with a down year, that goes even further.
right, right. I think this sums it up. I know this is a long live stream, and I don't even know if we had anybody watching, but at the very least,
I don't care.
I mean, even if we had 10 million people watching, it doesn't. That's not why I'm doing this. At
Yeah.
some point, hopefully, at some point, we get paid for this. That's great, but I'm not going to change. I'm not going to change the way I do this. We're not going to change how I spend money because I've always been this way, and this is we're just
Right.
showing people what we did. So hopefully somebody somewhere gets this, and hopefully somebody somewhere actually changes their life for the better. And I'm going to stress this again, just like the red flags in the Zim video. This takes time, and you have to
So
somehow believe that the
yeah,
American government is going to come back and do
we
good.
need to figure out between GD and ADP, right?
Yeah, I want to look at Colgate too. I'll poke at them and probably send you messages at like 3 in the morning. And hey, did you hear about this?
Hmm.
Hopefully, you don't get those. but we'll look at that. And then for anybody who did watch any of this, thank you very much. We do this every month.
Or if you're watching it later.
Yep. Yep. We do this every month. We're going to keep doing this every month. We're not going to post daily because we're old and
We have full-time jobs.
yeah, and kids, and we're boring. If we do get sponsored, it's probably going to be from like Rogaine or something.
Keeps.
Jeez. God, this is
Keeps.com.
depressing. Getting old
So
sucks.
so keeps.com if you're watching.
Yeah, what happened, Brian? We got old.
Yeah, it happens.
All right. Well, thanks. Go do your dinner thing, and then maybe there's some clips or parts of this that sound good. I'll put it on the SharePoint for us, and then we'll come out with a monthly stock purchase buy that nobody wants to hear about, and hopefully, at least somebody talks to their financial advisor and does something with.
Alrighty. I think we got a couple good options at least. So I think the next video will be which one did we choose?
Oh, good grief. None.
Hmm.
None of them.
All
I did whatever
right.
Kiyosaki told me to do, and I bought nothing but gold. And then I ate it. Or was it that celebrity painted it on their walls?
Yeah.
Their walls worth like millions of dollars.
I put it in my fireball and called it Goldslogger. Oh, wait a minute. All right.
And I'll
I
talk to you
think,
later. And what are you thinking about noon tomorrow? Something like that?
yep, let's do noon tomorrow.
See you then. Thanks,
See
everyone.
you then, man. Thanks everyone for watching. Peace.